Hello, everybody. Welcome to another Enlightened Investor Show, broadcasting from Peoria Heights, Illinois. I got Mike Mahoney here,
In
and
the heat of the dog days of summer.
it's been hot out there.
Yeah.
Golfing's been tough.
Yeah.
I had my 50th birthday not too long ago, and I got a present from Mike. I got the old putter, and that's been doing well for me.
Rolling well. That's good.
Yeah, two putted.
Eliminate those three putts.
No three putts.
I
for
may
me.
need a new putter myself then. Jeez. Anyways,
We're in here still in the
Yeah.
dog days of summer,
we're on a
experiencing.
hot topic. We're going to talk about the market and the recession and
Absolutely. And,
all
it's when you go on golfing with your buddies or I'm out at the office, I hear a lot of fear, uncertainty, and doubt. I hear, inflation. I hear recession, the gas prices, and I hear, I want to get out. And so I've been out golfing with people, and I think you have
yeah,
too.
I mean,
And
that's
what kind of questions you've
prompted us
been?
to talk about this? So I've been out, and people obviously know what I do, and we're out on the golf course, and I've had two different conversations with people. They said, you financial guys are all the same. You tell us to stay in there, and I have one buddy who's golfing, is not a client, but he said, I told my guy I wanted to get out back in February. And look, we're down now, and I was right. And I'm like, yeah, I get it. You're right. But I said the tough part about that whole getting in and out is you have to be right twice. And it's really, really hard to get in before you get in, get back in before it goes back up above where you got out. And I've been around a long time and seen this 08, 09. And when the skies don't turn blue and then tell you to get back in. It normally goes back up because, as you said, they're forward-looking markets.
Yep.
It's still really ugly out there when it goes back up, and it moves fast, and it seems to be moving faster all the time. If you look at March of 20 with COVID, it even moved faster. So the point being is you're not going to probably catch it. So you're going to then especially if you miss it. Once you miss it, then what do you do? Then you're really sitting on the sidelines, so you can really miss out more. And we're going to show the data on that at the end as far as what the numbers are, what the recovery is, and how powerful it is after these declines.
Sure.
But I thought I mentioned this article I brought out to you, and I thought we'd just kind of cover it
right?
the 4 R's because I wasn't aware of this. There's a Kaplan who's like a continuing education for certified financial planning and numerous other financial designations, has a new designation, the behavioral financial advisor, and they have a course broken down and they break it down into the 4 R's. So I thought we'd help people out with the 4 R's real quick and give them some stuff to kind of help them hang in there.
Yeah, because that's the whole idea. I mean, and it makes you wonder, the people that we talked to on the golf course, if it was their plan to get out, they're just making impulsive decisions. And that stems from that behavioral economics viewpoint
Right.
that Daniel Kahneman talks about, thinking fast and slow. Definitely a recommended read for all enlightened investors here.
Right.
Could you talk a little bit about Daniel Kahneman?
Well, yeah, Daniel Kahneman's well known in my industry, even though most people probably don't, just nerds that know about him, but you professors know about him. He's a PhD, Nobel Prize in behavioral finance, and he wrote one of his books is Thinking Fast and Slow, and it's rather thick. It's a deep read. But to summarize it, basically he covers, there's two thinking processes with our brain and two different parts of our brain to think. And you have system 1 and system 2. System 1 is our fast thinking system, that is our save us from the saber-toothed tiger, thinks really quickly, doesn't take time to mull things over, and it's kind of our caveman brain, right? And we're basically
survival.
We're cavemen. We're walking around the modern world, and today's saber-toothed tiger is our stock market, right? But then you have system 2, which is rational thinking, where you're going to slow things down. You're going to use your critical thinking, your brain, to really mull things over rather than just react to them.
So I think this 4 R's methodology from Kaplan is trying to bring us into that more logic,
slow things down, use your brain.
Slow things down. And maybe we can just kind of go over these 4 points today,
Sure.
and that's what our video is going to be about. So let's go ahead. So what's the first point here? It's on recognize the situation, right? I mean,
I'm pointing down because I don't have them on the memory bank, so we'll be looking here. Sorry.
That's no problem at all.
Okay.
So I think that volatility is part of life, right? I mean,
Correct. Right.
And I think as investors, as enlightened investors, we need to know that that's sort of the world we're playing in. We're not in money markets 100%. We are invested in equities and risk assets to some degree. It depends on our life stage.
If you've been here before, go look at 08, 09, or look at 2020, and what did you do then? And did it work out for you, or did you make a mistake, right? For those that tried to market time. So why would you want to try it again if you did market time and got hurt? Because I think most people that market time in 08, 09, at least that I saw back then, hurt themselves.
Yeah, they hurt
Some
themselves.
to a very big degree.
So they were fearful, they had thinking one behavior, and they end up hurting
Right.
themselves in
Sure.
their finances.
Correct.
So recognize the situation. We definitely are doing that. Number
Right.
2 is reflect on your values and zoom out.
Yeah.
So I think this helps because really at this point, folks, like look at your portfolio over the last not just 6 months, which has been hurtful, and I don't like it either, Mike. We're down. Your client said, "Hey, I'm down 100,000."
Yeah, well, my mother-in-law informed me this morning
Uh-huh.
that she was down, and I said, you have to zoom out a little further because long term it looks like this. When you start looking at the short term, you see some of that, right?
Yep.
Yeah.
So remember, we're folks that just when you get fearful, and I know it stinks, it doesn't feel good for me either. Looking at my portfolio, I just got my second quarterly report, not good, but just zoom out just a little bit. We've gone a long way from where we have been.
Well, and also, I mean, you need to kind of be aware of your biases because I think if you really don't have self-awareness and know of some of these biases you have, and you're using those to control your decision-making process, you're going to cloud your rational decision-making. You know, recency and confirmation bias.
Definitely.
Or even just, how about, like we mentioned, FOMO, fear of missing out.
Fear
if
of
you
missing
talk
out.
to your neighbor, he's out and you're in, that hurts.
Yep. And don't forget, I think a lot of people who are listening here today, they not only fear of missing out going down, but think about all of the people, including myself, Mike. Remember I FOMO'd into Tesla, right? Because I wanted to, like, remember, it's a lot of, Ryan knows the story. I wanted to, hey, I want to get this, have a goal, but I don't, why am I missing out here? And I'm just doing all these indexes, maybe tilted a little bit. So I took some of my risk
Play
money.
That's okay. As long as you know you're playing and you're gambling, that's good.
Yeah, so I took idiosyncratic risks, which is not really my values. My values is like, you know, educational, long run thinking, what's important, academic evidence-based investing.
Sure.
But I took a little risk. But okay, so reframe your viewpoint is number 3, right, on the list. Can you talk about that?
That kind of goes back to what we were just talking about a little bit. Number 2 is, I mean, you want to start, don't look to short term. You got to keep that long-term view. Because the short-term view is going to cause you to do the knee-jerk reaction, right?
Well, how about this, Mike? Are markets going to recover in the future?
You sure hope so, right? I mean, that's what you got to hope for. I mean, for people to think that they're never going to recover, you probably just need to make sure you got water and a garden and a couple animals in the backyard.
Well, you know what, folks? There has been lost decades, but don't forget, we always 80% up, 20% like down to sideways.
That's what they forget, that most of the time they're up.
Yeah, that's right.
Sure. Number 4.
Number 4, respond purposefully. And I think this is a good one, like respond. So like now that you've moved into like thinking 2 type way thinking, and you're doing the long run strategic thinking, now how do you respond with purpose? So, you know, I always like to, this is actually biblical, like have good mentors around you, good advisors around you, whether that be a financial advisor like Mike, your friends, they help calm you down and they say, like, stay the path. Don't do anything. Just sit there. Right?
That's hard to do.
It's hard to do.
Especially when you're losing money. Sometimes lots of money.
Yeah.
But also you can be purposeful by there's things we can be doing right now, which we are doing, is you are tax loss harvesting. You are rebalancing. I mean, you're actually, buy low, sell high, right? So you're rebalancing through this whole process.
Mm-hmm.
And
your
tax
taxable
loss harvesting
accounts.
as well.
Yeah. Yep, definitely taxable accounts. Focus on things you can control. I mean, I think this is one of the things we talk about a ton. And as educated investors, what can you control and what can't you control? You can't control what's out over here, but you can control what you're doing. What are some things that you want?
Well, before we get into that, I want to mention this, and then we've got this flyer we're going to put out there on the website. And because I think this is really powerful. I mean, and we'll put this data out there. This is past performance of market drops, and they show 10% market drop, 20% market drop, 30% market drop, and then they show the returns afterwards for a year, 3 years, and 5 years. And it's pretty impressive. Even after a 10% drop after 5 years, you've seen almost a 70% increase in the market.
Yep.
20% drop, 71%. 30% drop, it's only 50. But I mean, it's powerful.
Well, especially if you've got a longer time horizon, think about that. I mean, like, Ryan here, he's just DCEing
Right.
all the time, and he's once he's hitting these lows, he's buying into the lows.
Sure.
He's going to
It's
knock out
definitely
those.
huge for young people. Huge.
Absolutely. So stick to it,
Yeah.
and then so
But back to what you can control.
Yeah,
Sorry.
yeah, actually,
I
I
flipped this out of order there. So we're going to put this out there. This is a flyer we put together. It's just a quick 2-pager, and it's about
a good one.
10 things that you can pursue and actually have control over to have a better investing experience. And they're rather simple. I'll just kind of rattle them off real quick. Number 1, embrace market pricing. Passive investing, index funds, index ETFs, asset class funds. Don't chase market returns. Number 2, don't try to outguess the market like we're talking about right now. Very few active winners win. Number 3, resist chasing past performance. We give the data there. Number 4, let the markets work for you. Number 5, consider the drivers of returns. Number 6, diversification. We keep talking about that one. Number 7, here we go. Today's topic, avoid market timing. Number 8, today's topic, manage your emotions. Number 9, again, today's topic, look beyond the headlines. And then number 10, focus on what you can control. And that would be creating a written investment plan based on your needs and willingness to take risk and your values. Build a portfolio around what actually drives returns, asset allocation, and not trying to pick stocks. Diversify globally in a portfolio of over 14,000 stocks. Manage your expenses and your taxes, and in the end, stay disciplined.
Yeah, stay disciplined, and that's what today's show's about.
Sure.
And even like Ben Franklin, we were talking before the show, like he would plan out his day even down to like every 5 minutes or something like that. And those plans, they can adjust over time, just make people more productive. And these plans with finances make people
It gives
stay
you
away from that
peace of
type
mind
one
and greater
thinking.
confidence that you're okay. That's like I did have a client call this past week that was said concerned about my drop, and they're in their early 70s, and I understand that, and I agree with them. I empathize with them, but I said, you know what? Look at your numbers. We run the numbers, and everything's working. Your plan still is solid.
Yeah,
99%
99%
that's counted.
success rate.
Today's drop or recent drop, it's included in the plan. You're fine. Everything's good. We don't have to do anything.
Yep.
Yeah, that's it. That's all I got.
That's all we got today, folks.
Cool.
Hey, we are here to help you through like this This stuff's worth its weight in gold. It's really good stuff here. I hope you get a chance to take a look at our website. Let us know if you have any questions.
Yeah,
if
fire
you
away.
made
Send
this
us some
far.
questions, what topics you want us to cover.
Exactly. And we really appreciate you being here. And just make sure you like and subscribe. And this is the Light Investor Team signing out. Take care.